Right now, most investors are ignoring Chainlink. The price action is sitting perfectly flat, oscillating tightly between $8 and $9, essentially putting everyone to sleep. However, if you look under the hood, something massive is unfolding. We have witnessed 15 consecutive weeks of positive exchange-traded fund inflows totaling over $92.6 million. No outflows, only inflows. At the exact same time, our weekly technical indicators are flashing a reversal signature we have only observed at absolute local or major bottoms. So, why is smart money silently accumulating while retail traders complain about boring price charts? Today, I'm going straight into the verifiable intelligence. We'll examine the institutional footprints, the traditional finance monopolies integrating this middleware, and the specific technical levels that dictate my entire risk management protocol. If you want to understand the profound difference between chasing temporary hype and securing risk-adjusted returns, pay close attention to the evidence I'm about to show you. Let us frame the current market structure. Over the past 6 weeks, price action for Link has been agonizingly slow for the average investor participant. Price has been hovering right around that $8 to $9 range, slowly bleeding against broader market momentum. Social sentiment shows general frustration is highly visible. Market participants are aggressively chasing short-term narratives and rotating capital into highly speculative assets. But capitulation is not always characterized by a violent red candle liquidating the market. Most of the time, true capitulation is just time. It's sheer boredom. This video matters heavily right now because periods of extreme low volatility, when combined with high underlying institutional accumulation, historically precede major structural repricing events. The fundamental disconnect between what Chainlink is actually executing on-chain and how the token is currently valued by the open market is arguably one of the widest I have analyzed. Retail traders rely on emotion, but we rely on objective data. A specific institutional footprint completely invalidates the bearish argument for anyone willing to investigate. We are witnessing a total restructuring of how legacy finance interacts with blockchain architecture. Let us examine the fundamental catalysts driving this before mapping the entry levels on the chart. The primary narrative here is no longer about simple price oracles. It's about establishing the universal settlement layer for global finance. Consider the recent statement from Matt Hogan, the Chief Investment Officer at Bitwise. He explicitly stated that sophisticated investors need to own the actual service providers, specifically identifying Chainlink as the industry-standard decentralized computing network. When the chief investment officer of a prominent crypto index fund signals an allocation shift toward infrastructure assets, that requires immediate attention. These legacy institutions are actively deploying capital. DTCC, Clearstream, Euroclear, and Boston Consulting Group recently published a comprehensive interoperability framework for digital asset securities. They formally acknowledged that financial instruments must move across different systems while rigorously preserving compliance and ownership records. This is precisely the problem this protocol solves. We are observing this executed live under the Hong Kong Monetary Authority program. Visa, ANZ, China Asset Management, and Fidelity finalized a cross-border settlement solution powered entirely by Chainlink. They are moving regulated digital assets between private banking ledgers and the public Ethereum Sepolia network. Combine that with the ongoing integration involving SWIFT and UBS, and the reality becomes clear. Global banks refuse to rebuild technology stacks from scratch. They utilize this protocol as the backend to route capital on-chain. Simultaneously, the network recently integrated with the Hedera Layer 1 to provide real-world data and cross-chain interoperability. In the decentralized finance sector, massive protocols like Jupiter are securing prediction markets with low-latency data streams. Furthermore, the perpetual exchange EdgeX adopted Chainlink as their canonical infrastructure. This adoption drives tangible network revenue. Recently, the Chainlink reserve accumulated 119,000 tokens in a single day, valued over $1.1 million. Total holdings exceed 2,400,000 tokens. Developer activity reinforces this. The protocol ranks third overall in notable GitHub activity over the past 30 days, with a score of 276.
Finally, liquidity pools severely constrict available supply. We observe yields reaching 274% annualized percentage yield on the Supernova pool, which can qualify you for a potential airdrop, and over 64% on Uniswap. High capital efficiency encourages holders to lock tokens, eliminating sell pressure. Now, I'll show you how this fundamental strength translates to the chart. Look at the weekly time frame displayed on screen right now. Zooming out evaluates the macro environment. I anchored our primary Fibonacci retracement from the local top of $31 in December 2024, down to the ultimate local bottom near $8 formed in October 2025. That $8 support zone is structurally vital. Examine the lower bounds of the chart. That $8 level matches the massive liquidation wick from the historical market flush on October 10th. Furthermore, that horizontal plane aligns perfectly with heavy resistance observed during the deep accumulation lows of 2022 and 2023. That multi-year historical resistance has decisively flipped into our primary macro support floor. Currently, we trade below the 55 exponential moving average, the purple line, and below the 200 simple moving average, the green line. This positioning maintains a bearish posture on higher timeframes. Immediate resistance sits distinctly at $10. If we successfully reclaim that level, the next major structural hurdle is $13, aligning directly with the 236 Fibonacci retracement level at exactly $13.40. You can identify a clear descending trend line, the orange dotted line, originating from the August 2025 local top at $26. That trend line acts as heavy dynamic resistance in the future. My personal strategy is defined by a specific momentum signal. Look directly at the Heikinashi Relative Strength Index below the main price action. We are positioned at the most extreme oversold levels in the documented history of this asset. More importantly, it's starting to slightly point toward the upside. If this current weekly candle manages to close as a green engulfing candle over the previous week, which is happening right now with 4 days remaining until the close, it confirms a massive momentum shift. I placed white circles on both the indicator and price action to highlight historical precedents. Every single time we triggered this identical oversold condition, it established a phenomenal accumulation zone that preceded massive structural appreciations in price. We are operating in that exact mathematical scenario today. Because of this technical confluence, my primary load zone is the green box resting between $7 and $10. I'm slowly accumulating a long-term position here. This asset represents up to 3% of my total crypto portfolio, while my primary holdings remain in Bitcoin and Ethereum at around 65%. My strict take-profit targets, indicated by the green circles, are systematically layered upwards to ensure capital preservation. I take profit at $13, $16, $19, $22, and $26, leaving a small percentage for the $45 level. I use trailing stops once we clear $13. When I synthesize fundamental cash flow data with current technical market structure, risk versus reward asymmetry becomes incredibly defined. The worst-case scenario involves a breakdown below our invalidation level at $7. If that technical failure occurs, we likely enter a prolonged capitulation phase. In that event, I would immediately pause all accumulation and wait for a completely new market structure to establish itself. However, the best-case scenario, carrying a statistically higher probability based on verifiable on-chain data, dictates that this $8 zone holds firmly as the ultimate cycle floor. If traditional financial institutions continue routing cross-border global payments through this specific network architecture, and spot exchange-traded funds continue absorbing available supply at millions of dollars every single week, liquid supply on open exchanges will effectively evaporate. This is strictly a long-term capital allocation strategy. I'm absolutely not looking for a rapid, volatile surge by next week. I'm positioning my capital for a fundamental structural repricing that unfolds over the next 12 to 18 months. Underlying fundamentals provide initial conviction, but the technical chart strictly defines calculated risk. To summarize my core thesis, Chainlink is actively transitioning from highly speculative crypto infrastructure to the mathematically verified, regulated settlement standard for global finance, all while technically trading directly at a multi-year macro support level. The open market consistently punishes impatience, yet it heavily rewards those who can objectively identify extreme value long before the retail crowd recognizes the shift. The raw data does not care about your personal emotions or your fatigue with current link price action. The data simply indicates exactly where institutional capital is flowing behind the scenes. Right now, sophisticated money is silently trapping available supply at these historical lows. If you found this objective, data-driven analysis valuable, please hit the like button and subscribe to the channel. I also highly encourage you to join my free Telegram group for faster, daily market updates and technical setups. You'll find that direct link in the pinned comment below. Additionally, make sure you watch my last 2 videos covering the historical progression of Chainlink, as each video is a direct continuation of the analytical framework we build here. Please remember this presentation is strictly not financial advice, but rather a transparent view into my personal risk management strategy and market structure analysis. Thanks for watching. Strictly manage your risk, aggressively protect your capital, and I'll see you soon in the next one.